late. I am
That's
like
true.
99% punctual, and today was just unavoidable.
All good?
One of those things, okay.
You know, that traffic, I was in it.
Yeah, no,
Oh,
it wasn't
gosh.
traffic. It was I have an appointment that I go to, and I usually get there at 3:15, 3:20 before I come into here. And the guy was running late, and I had to cool my heels for 25 minutes, and it was not good. So
Okay.
anyway, so I'm here at 4:10 instead of 3:45 or 3:50 like I'm usually arriving.
Yeah, Mark usually gets here a little bit early. Okay, so what we'll do is we'll have Greg on for 1 or 2 segments.
Yeah, we should. Let's do a couple. Only because I didn't know it was going to be solo otherwise.
Okay. And
So I didn't bring a ton of material, but of course I can
I've
talk
got
about
a
all
few
kinds of stuff.
announcements to make too.
And Greg, so where are you located at, Greg? Where are you calling from?
San Jose.
Downtown San Jose.
Nice.
Right off the market.
Okay. Can you check
Okay.
my?
Okay. So your headset's number 4. So are you?
There I am. Yeah. Okay. Yeah.
Okay. All right.
And I can hear Greg. I just want to make sure so Greg. You're out of Santa Fe. I'm sorry, San Jose.
One
And
full service leasing and property management.
right. Greg? Are you mostly residential or commercial or both?
Residential, that's our focus.
Residential.
And we typically target small residential, so 50 units all the way down to single family is our range.
Wow. What do you charge for single family?
For single family,
Yeah.
so we charge for leasing 50% of first month's rent, and then for management it's 5% of the monthly rent.
That's fair for single family. Okay. Are you ready?
I'm ready. Do you want to? So you're going to announce him?
Yeah.
Do you want to ask the first question? Or you want me to ask?
Well, we're gonna the I didn't like the way it was worded. The status quo in property management.
Yeah. What do you think?
I think there's just a different way because I don't think the audience will understand what the word like status quo in property management.
Yeah. That's what it was. So what is what's new?
Yeah, I mean, you can do that, sure, because the other questions are really good. I like the other questions. Okay, are you ready? We're going to go ahead and start right now. Here we go. Welcome. You're listening to The Best of Investing. I'm your host, Edward Brown. I'm proud to have as my co-host Mark Hanf of Pacific Private Money, one of California's fastest-growing mortgage investing firms. Our phone number is 888-912-1190. Use that number to answer the trivia questions for 3 tanning certificates given away during this show. Those certificates are not sponsored by the radio station, but by Tan Bella Tanning Salon, with 2 locations in San Francisco and 1 in Marin. And before we get introducing our guest, I do want to make a quick mention here. So our friends at High Tech Screens and Shades, they did something for my house, and I got to say it's one of those retractable screens. And it is phenomenal. You got to check them out. Call my friend Rick at High Tech Screens, and their phone number is 415-328-4613, or just go to hightechscreensandshades.com. They do shades, awnings, retractable screens. They're doing a phenomenal job.
Yep,
I really appreciate
You
it.
demoed it for me. It was actually really cool.
Yeah, oh, that's right. Yeah, I showed it to you.
Cool shades.
Very cool shades. That's right. Okay, our special guest today on the phone is Greg Toschi from One Rent, who does full-service leasing and property management in San Jose. Greg, welcome to The Best of Investing.
Hi, Edward, Mark. It's a pleasure to be on the show. Thank you for having me.
You're very welcome.
Hey, welcome. So Greg, what is there anything new in property management today that you could share with the audience?
Absolutely, yes. So we're seeing a lot of new technology coming into the space, and that's partially why we got into it. What we saw was a space that didn't have a lot of technology being introduced to the experience for renters and property owners, and we see this as kind of the future space in real estate, is really bringing a lot more technology and automation around that experience. It's always been our vision to create a one-click experience for renters and really being able to have kind of a streamlined experience for owners that have more of a bird's eye view of their property.
You know, it's funny that so many industries, and especially now in mortgage and real estate, there's a lot of money coming in from technology looking to quote unquote disrupt that particular niche area. Do you see that happening in property management?
Absolutely. I mean, property management is really kind of one of the most fragmented industries. I mean, there's like 200,000 of these brokerage offices across the U.S. And if you just did a little search for San Francisco alone, you'd see like 50 plus offices. So what we're seeing is really kind of a consolidation of the market, and we believe technology is kind of a core part of that. It's really bringing more automation and scalability to the industry. Because a lot more people, I mean, the real estate sales is the focus for a lot of agents, and they're handling management on the side. And for them to be able to use technology to automate that experience for owners and for tenants is becoming kind of the trend.
So if I'm a real estate investor, and let's say I own, 6, 7, 8, 10 properties, and maybe I've shied away from using a property management company because, quite frankly, I want to save the money and do it myself. What don't I know about property management that I should know that you could help me with?
Absolutely, yeah. So, I mean, what we've seen, and we get that a lot from property owners that had a bad experience with management in the past, and they're looking for an experience that's more open, more transparent, and that's really about technology, and that's what OneRent is about. Is really providing a transparent experience for property owners to be involved. We deal with a lot of DIYers, is what we call them, do-it-yourself property owners, that are just starting into the space of real estate investing. Maybe they had a manager before, or they never had one before, but they're looking for an experience where they can have control over the experience. They can see what's happening in their property on a day-to-day. And if you're looking for technology platforms like OneRent, it's really looking for a platform that allows you to have that experience where you can feel like you're in control of your property, but at the same time, you don't feel the need to be always hands-on with it.
So things look pretty competitive nowadays. How do you drive down the vacancy and improve the turnover speeds?
Yeah, so that's really about the experience. It's about being on demand. For us, especially during the leasing time and with pricing the properties, it's about using algorithms and tracking the market fluctuations with tenants moving. So we kind of have a unique position in the marketplace. We service from San Francisco all the way to San Jose and up to Richmond, kind of the whole geographical area of the Bay Area. And that gives us kind of a bird's eye view of what's going on with tenants, where they're moving, and what's happening in the marketplace. So that gives us kind of an overview. And in addition to that, it's really providing that on-demand experience for renters. We show our properties 7 days a week, any time of day. And we do that with a mobile workforce. These are basically mobile managers that are out in the field and are available 24/7. And they can go out and show a tenant with just a few hours' notice any one of our properties at any time of day. So for a tenant, that's really how you compete in the marketplace. It's being on demand.
Yeah, I can imagine it's kind of hard when the potential tenant calls and says, "Well, you're gonna have to wait till 7 p.m. tonight, or wait till Saturday when we can get our guy to show you." But if you have those mobile guys, that's actually really good.
Exactly, because the industry trend has always been about open houses, and they're very limiting. I mean, you only have maybe one open house every week, and you're turning off a lot of tenants. They're just on the move. They're looking for a place right now they want to be with.
So what are you doing, Greg, that some of the other more traditional property management companies are not doing?
Yeah, absolutely. So that's one of them. One of them is bringing an autonomous on-demand experience for renters. And the other one is we're starting to incorporate more and more technologies around the showing experience. For example, we just rolled out a test with what we call autonomous showings. So these are properties that have automated locks attached to them, and then pre-qualified tenants that are actually already qualified as a renter. They've provided identification, etc. And they can go and view these units on demand anytime. Like I said, I mean, the key here, and this is what most traditional property managers can't provide today, is really a full technology-enabled experience for the renter, where it's almost like a one-click.
Okay.
They can go view a property very quickly, whenever they want to. They can go into the property if they like it. They can have it right then and there. And we have automated leases online, and application only takes a few minutes through our portal, so they can complete the whole experience in a few minutes if they find a place they like.
Okay, hey Greg, stay with us. We're going to cut to a quick commercial break. When we come back, we're talking with Greg Toschi, who is a professional manager of apartments and single-family dwellings and commercial. Okay, here is our first trivia question. What do teal pumpkins represent to trick-or-treaters? All right, the first caller with the correct answer is going to win a free $10 certificate. Call 888-912-1190. Don't touch that dial. The Best of Investing will be right back. All right, good. So that's our first segment. We need to save the file, and we'll continue on with you.
Great. Awesome.
And then we'll give you a chance. Yeah, we'll give you a chance to give out your information, your website and phone number.
What haven't we covered yet? Throw out a couple more questions you'd like to.
Future rental market. And
I think the future of rental markets might be a good one,
Okay.
and then the future of the rental experience for tenants.
Okay,
Yeah,
good,
that-
perfect.
That is good.
And sometimes your responses will trigger another question that isn't part of your list. That's kind of how we
But we don't.
oftentimes end up.
Yeah, but we're nice to our guests. You know, we're not Jerry Springer.
You know, I started, Greg, I started watching the other day, but I couldn't finish it, a Shark Tank episode where some guy was there with a real estate technology product that was like something, it's something that hangs on the door that's like the
I saw
MLS
that one.
service. It's like, it was like orange. And
Yeah.
did you watch the whole, what was the net out of that?
Well, he didn't get a deal because people like Barbara Corcoran knows about real estate. It's like, well, I don't want some person just going into my house.
And that was the thing that anybody could go by, and if they had an app and they were registered, and there was one of those orange
That's
MLS key things on the doorway, they could actually go in and tour the house.
Yeah. We
Novel,
could talk about that.
interesting.
A little bit. Okay. All right. Here we go. Well, welcome back to The Best of Investing. I'm Edward Brown, your host, along with Mark Hahn. When we had our first trivia question, this was the question. What do teal pumpkins represent to trick-or-treaters?
I don't think I've ever seen
That's a
one.
weird question.
That is weird.
I haven't either. Non-food treats. I don't even know if the kids would even know that, you know? Before we continue on with our guest, we want to make another mention here for Alcatraz. If you're visiting Alcatraz, the legendary San Francisco island, planning ahead is a must. I know that for sure because when I went to go do Alcatraz, it took me, like, you can't just show up and go, I want to go to Alcatraz. You have to do it way in advance.
Wow.
The best way to do it, www.alcatrazcruises.com. They guarantee the lowest price for Alcatraz tickets. So on the phone, we have Greg Toschi, San Jose full-service leasing and property manager. Mark,
From OneRent, right?
Yes, that's right.
Greg, what's the future of the rental market for the Bay Area?
Yeah, so we've seen some very interesting trends in kind of the marketplace, and one of them has been single family. So a big portion of our portfolio is actually single family rental. It's about 60%. And what we deal with is we deal with a lot of new time owners that are coming into the space. About 68% of our owners are first timers coming in from single family. So we think single family is going to make a big play.
And do you do Airbnb? I mean, would you, if someone said, I want to do Airbnb, but I want someone to manage it for me, would you be involved in that?
Well, we actually focus on long term. So that's our target. We typically do 6 to 12 month leases or longer for tenants. We're not focused on short term. So typically we deal with more long term leases for kind of single family and smaller investment properties.
Got it. So how about the future for the rental experience for tenants? What's that look like?
Absolutely, yeah. So we really view, at OneRent, we view the property as a platform. And when you think of kind of service apartment type lifestyle, you look at bringing to the small investment property owner the experience to their tenants that's really full service. It's the idea of you as a renter can have your utilities set up when you move into your property. You can have it fully furnished upon signing your lease. You can have your internet hooked up. It's really about providing an experience where you can, as a renter, once you finish the rental experience of renting a property, signing your lease, when you get to that property, it's completely set up for you. And that's how we view the future of this experience and where technology will play a big role. You see this in kind of the space of like the larger apartment complexes and things like this, but you haven't seen it in the smaller units, the single family or the small multifamily. And technology will be a key in bringing that experience to renters in those properties.
You know, it's interesting. It reminds me of, because you mentioned, it almost sounds like a concierge type of service. And of course, and I had an experience when I was waiting for a home remodel to get done. I had to move out of one rental and into a very short-term rental that was fully furnished, but it was in a kind of a high-density apartment complex. And I would have really loved to have been able to take advantage of something like that in a like in a single-family home. Now, you did say you're not short-term, but still, the idea is intriguing to have kind of like almost a concierge type of service availability for renters. So all they have to do is show up.
Exactly, and that's how we view the space. And we kind of touched on that point earlier, being competitive. And this is how we think owners and being competitive in the rental market. This is what owners will have to provide. It will become a standard, we believe, over the next few years, where having this experience of a full service will be even available in the single-family space.
How do you see the rental market right now? Obviously, the Bay Area has been notorious for rising rents the last several years. You've got your ear to the ground. I mean, you're in the business. How are Bay Area rents faring right now, or is it still more of a neighborhood by neighborhood marketplace?
It is very much a neighborhood by neighborhood marketplace. What we're starting to see, because we kind of service a pretty large geographical area from San Francisco, San Jose, all the way up to Richmond, we see a lot more people migrating down to the South Bay as well. Lower Peninsula, San Jose, and with rental rates kind of topping off in kind of San Francisco marketplaces, especially on the very high-end airspace. But we do see a lot more people actually migrating into the South Bay. These markets are starting to get a lot hotter.
So do you see those rents still trending upward in the South Bay?
For certain marketplaces, areas like Hayward and San Jose, we are starting to see those locations, actually those markets, still trending upwards.
So if someone wants to get a
especially when you're looking at investors that are putting a little bit of money into their properties, upgrading them, and providing a little bit more value to renters.
So we're talking to Greg Toschi of One Rent, who is who handles rentals for residential and apartments and small commercial. Greg, how does someone get a hold of you if they want to find out more about the services that One Rent offers to residential real estate owners?
Absolutely. You guys can visit us at lease.onerent.co. That's lease.onerent.co, and check a look at our services that we provide, and contact us from there.
Is there a phone number you can give out?
Absolutely, yes. In terms of the phone number, it's 408-813-0153.
Great. Greg Toschi from One Rent. Thank you so much for joining us on The Best of Investing.
Thank you. Have a nice day.
You too.
Okay. I love technology in real estate, and it's amazing how we were talking at the last segment that there's so much money coming into various real estate niche sectors with the idea of disrupting it. And maybe disrupt is too strong a word for it's not like necessarily the Uber of property management, but still adding technology and making it easier for owners of rental property and potential renters to be able to view rental property options, setup, and those type of services.
I think it's really smart to have these mobile managers, because then the tenants don't have to wait. Like what you say, within an hour or two, they can go ahead and see a property.
Yeah.
All right. I want to make a quick mention here also for 101 Surf Sports right here in San Rafael. They were honored as being the nation's #1 stand-up paddleboard shop. They teach stand-up paddleboarding. They also have kayaking, and you can rent a boat in the San Rafael location. Have you ever done paddleboarding?
I have.
It's fun.
It's harder than it looks.
Yeah, well, but it does your core, that's for sure. They also teach windsurfing, kite boarding, and surfing.
Nice.
And you can get all the gear right there, so you can just participate with them. You can go online to reach them at www.101surfsports.com or call 415-524-8492. All right, Mark, so you know what? Let's see. Let me think about this for a minute. I got a quick email. Actually, you know what? We don't have time for email right now because I'm going to get into that next time. It has to do with the fact that your fund is paying 7.5%, but the only money this person has to invest is his IRA. And he wants to know, can he invest with his IRA? Before we cut to the break here, I want to make a mention for the Mount Shasta Resort. Why fight the traffic going to Tahoe? In fact, I just had a friend come back from Shasta. He said that's the best place. There's no lines. The traffic is easy. It takes about the same 4 hours to get there from the San Francisco Bay Area. And it's really inexpensive. Weekday packages start at only $75 a person per night at the Mount Shasta Resort. That's www.mountshastaresort.com or call 530-926-3030. All right, so Mark, here is our second trivia question. And it is, what do the letters for the car manufacturer BMW stand for? All right? First caller with the correct answer is going to win that free Tan Bella certificate. Call 888-912-1190 answer that question. Don't touch that dial. The Best of Investing will be right back.
All right. Okay, so
Yes. Mom had sent me a couple of things, in case you didn't have enough. Is there anything
I
specific
tried
in there?
every time I went to go pull blog posts down, I got interrupted today. So and then I had to escape at 3 o'clock to make it here on time.
I'm just going to feed you with some stuff and talk about the fund.
Sure. I did watch. Well, I got only through half of that David Stockman interview. You know, you'd think I'd be able to watch it. Well, actually, when John said it's a 26-minute interview, I'm thinking there is no way I would be able to get through a 26-minute video. I can't do that. Not during the day. And when I go home at night, I'm not going to watch 26 minutes of David Stockman.
I mean, there's only a couple of things that were like.
I got two quotes from him that I think I might just utilize just for the heck of it. Just
Yeah, I mean, it was okay. Nothing special.
and then Nam had sent a couple of links, and actually one of them I wouldn't want to talk about. It was some guy that through his own charting technique seems to think that that real estate is going to go to heck in a handbasket again. That could be like a bubble bursting. It's like I don't believe that. I just think that's nuts. So.
No, the underwriting is a little bit more conservative now.
Yeah. Well, no, it was. You would have to read the article, and I can't paraphrase it. I'm completely brain dead. But it had to do with something that I don't even remember what the title was anymore. But it was something that we would click on, like.
Could be just the economy in general. If people lose their jobs, that's what would happen.
No, his whole premise was based on the fact that baby boomers are all retiring, and the actual percentage of people in America who are going to buy homes, he thinks are going to drop through the floor.
Yeah, but the thing is, millennials are now starting to they're getting older and they want to buy houses.
Yeah, exactly. Yeah, I don't believe it. I think his premise is false.
But it sells newspapers.
Yes, it does.
Okay. Let's see. This one is at 8:10.
8:10. This is the third one. I've got 7:40, so it's 8:10.
It changes.
Okay,
It depends
8:10.
on where I get
All right.
questions on there.
So 8:10.
I just have this. Okay, well.
So you got another mention? You got a lot of mentions today.
It's just, as one I forgot to get the information. Okay. Yeah, so I can ask you this question.
Yep.
Do you have a deal of the week? We could talk about that one we're going to do in March 15th. The one where they own Sunnyvale. They're moving to Oakland. The first mortgage is $300,000 on Sunnyvale. Property's worth $1.2 million. They're buying a house for $1.6 million in Oakland. We're going to give them 100% financing because we're going to cross on both properties.
I kept asking Rick for the details. I never got them, and I've been so distracted all week with countless things. So
Tell you what, let me.
I don't.
Here,
so 1.6 purchase.
Yeah, here.
1.6 purchase.
Okay, here, let me forward this to you now. You can just kind of look at it on your phone.
So I only know what the house looks like.
Yeah, it was beautiful.
We were looking at the house. I didn't get the whole story. I just saw, hey, does this look like a deal? That was the Modesto deal, right?
Yeah. This was selling Sunnyvale, moving to Oakland.
They had enough equity in their Sunnyvale house.
Yeah. $1.3 million.
selling it for $1.3 million.
Let's see. I'm sorry. They had 900,000 of equity because it's worth $1.2 million, and they have roughly 300,000 as a first. And they're buying a property for $1.6 million in Montclair, and we're going to actually lend them the entire $1.6 million because we're going to get both properties. And as soon as they sell Sunnyvale, we're going to pay down of roughly $800,000 to $900,000.
Yeah, so it's a true bridge.
All right. Okay, so I found my Yosemite one here. Let me explain that mention. Well, welcome back to the Best of Investing. Edward Brown here, along with Mark Hunt. What do the letters for the car manufacturer BMW stand for?
Bavarian Motor Works.
Yes, in fact, a lot of people think it's British Motor Works, but it's not. It's a German company, so it's Bavarian Motor Works. I want to make a quick mention again for the Yosemite Gold Country Lodge, which has been called by guests a hidden gem, a beautiful place, and a great place with down-home country charm. Stay at the Yosemite Gold Country Lodge means that you'll be in the historic district. Rooms feature fireplaces and private balconies or patios. Check them out at ygclodge.com or call 209-878-3400. So, Mark, we got an email from a listener that says, I've heard you talk about your fund paying about 7.5%, but the only money I have to invest is in my IRA. Can I invest that with you?
Well, that's a great question, and that's one we get, every week at Pacific Private Money, because it's not clear to people that alternative investing is one of the best ways to diversify your IRA portfolio. And so if you have a self-directed IRA, and that's really the condition that you really need to have there, is many of us have IRAs, and some of them are with some of the major brokerages. And even though they might call it a self-directed, what they really are, it's really misnamed, because all they're really allowing you to do is pick among their approved list of investments. Typically, they won't let you buy real estate or invest in alternative, like debt-secured funds like the Pacific Private Money Fund. However, there's a whole industry of companies that are IRA custodians for self-direction. They exist to allow you to open up an account with them, and they are regulated, and they're approved for holding IRA accounts. And this would include solo Ks, 401ks, and various types of IRAs. And so if you contact companies, in fact, Edward and I, we have our self-directed IRA accounts with IRA Services based here in the Bay Area. They're at iraservices.com. And if you open up a self-directed IRA account with them, they and other companies like them allow you a very broad category of investment options. There really is very few things you can't invest in. In fact, they can give you that list of things. It's easier for them to list the things you can't buy because it's a relatively short list. Yeah. Everything else you can buy. So, and that would include buying real estate or investing in real estate secured funds, also called mortgage pool funds, like the Pacific Private Money Fund, which is currently up to $25 million in assets under management. We got about 75 mortgages that comprise that $25 million. It's paying about 7.5% right now. It's paid as high as 8.5%. So it kind of swings based on the type of loans we put in the fund, and those loans have been trending. The rates we've been able to charge customers and clients has been going down in the last couple of years.
Because of competition.
Yeah, because of competition in the marketplace. There's a lot of money out there for short-term bridge loans that we specialize in, and fix and flip loans and small commercial or cash out, that type of stuff. The fast financing the banks don't do. And we'll talk a little bit more about the type of loans we make at Pacific Private Money a little later in the show. But for right now, the Pacific Private Money Fund, which currently is paying about 7.5% on an annualized basis with monthly distributions. And again, past performance is not a promise of future results, so you do need to qualify to invest in a fund like ours. So for more information, contact us at pacificprivatemoney.com. But just to elaborate, it is a good investment for IRAs because you can choose not to take the monthly distributions and let those monthly distributions compound or buy additional shares and grow your account even more. And so from the the magic of compounding, we all know that you can actually grow your savings more quickly, and that's a benefit that you don't get if you invest directly in a real estate secured note. And you've heard us talk on the show before that there's two primary ways to participate in note investing or trustee investing or mortgage investing, as we call it in general. Mortgage investing is both investing in individual notes where you are the bank, your name is on the note, and you can do that through Pacific Private Money as well. We still do that. We started out doing that in 2008. We still do that today, although a growing majority of the loans we fund now are through our one of our 3 mortgage pool funds, and with our main fund being the Pacific Private Money Fund, paying about 7.5% right now. And so we can take up to 25% of the deposits in our pool via IRA accounts. And I wish it were higher, because I tell you, sometimes we get calls from people and we're kind of at our limit and we have to turn that money away, and I hate doing that. And it's an SEC regulation. We didn't make that up. But
I wonder why that is.
Well, I don't know. I think it's an old regulation that really isn't up with the times, because more and more people are looking for ways to boost their their retirement savings.
Yeah.
And mortgage pool funds and secured notes are a great way, because the safety and security features that you have there are stellar. The loss of principal, in my opinion, is much less likely in a mortgage pool fund or an individual note than it is in, say, the stock market. Now, the stock market's doing great right now, right? It went up over 21,000 this week. The Trump bump just continues on and on. But it's funny, Edward, someone sent me a link to an interview with David Stockman. Remember that guy?
Mm-hmm.
From President Reagan. He was the young, the economic advisor. Was that his... Anyway, he went off on a 26-minute rant in this particular interview, and basically I'll share with you in 2 statements the gist of his interview. That he called the current rally the greatest suckers rally of all time.
Wow.
And he believed that the current pricing in the stock market was utterly unfounded bullish optimism.
I'm thinking about shorting Snapchat. That just came out, and it was supposed to come out at like $24, and I think it went up to like $40.
Yeah, I don't know. My daughter uses that. I don't use Snapchat. But anyway, back to David Stockman, greatest suckers rally of all time. He's calling the stock market. He says it's utterly unfounded bullish optimism. Now, Edward and I are real estate guys. We don't invest in the stock market, but I'm not going to bash the stock market. I'm actually really pleased to see the indexes where they are now. It's great for the economy. It's great for consumer confidence. But if you're nervous, real estate is a great hedge for that nervousness right now. Because even if you think real estate is a bubble, and we don't, real estate doesn't move quickly. And when you invest with the Pacific Private Money Fund, you get the benefit of the fact that we make short-term loans that pay off very quickly. And even if we do begin to see a slowdown or a downturn in the market, most of the notes that we've made are extremely well protected at the Pacific Private Money Fund. Actually, all of them are very well protected, and most of them are short-term.
We'll talk more about that when we get back. Third trivia question. What variety of beans is used to prepare Boston baked beans? 888-912-1190. Don't touch that dial. The best of investing. I'll be right back. You know the answer to that?
Boston baked beans. Are they Boston baked Boston beans? No, I don't know the answer to that. Boston beans. What kind of Boston baked beans are made with pinto beans? They're not refried beans. Jelly beans.
Jelly beans. There you go. You should answer though. That's a good answer.
Beans. Good for your heart.
That's right. That's true, right?
What
In
happens?
fact, bread used to be considered brain food.
Bread?
Yeah. But that was before they made it last, 200 years on the shelf life.
So this is the next long segment. So
Yeah.
I'll go back and wrap up a little bit
Okay.
for the last segment because we had to cut it short on the okay.
Welcome back to the Best of Investing one more time. I'm Edward Brown, your host, along with Mark Hunt of Pacific Private Money. Third trivia question: what variety of beans is used to prepare Boston baked beans?
I'm sitting here rattling off all the beans I know. But it's not pinto beans. It's
Nope.
not black beans.
Nope.
It's not jelly beans.
It's not jelly beans. It's navy beans.
I thought the navy beans were those like really big honking beans, but
I guess that's what Boston baked beans are.
all right. Now you know.
And you know what? What do you do if your child cannot hear or speak? Where do you go? Well, the Weingarten Children's Center provides innovative and effective therapy and education services to children with hearing and communication challenges. They're also having this great benefit golf tournament on Monday, April 17th. It's breakfast, lunch, dinner, and golf. You got to check that out. Go to listenspeaklearn.org. It's at the exclusive Peninsula Golf and Country Club in San Mateo. I did it last year. I'm going to do it again this year. Lots of fun. Okay, Mark, why don't you continue on with what you were...
So last segment we were talking about can you invest IRA funds into an alternative investment platform like the Pacific Private Money Fund, which is a secured debt fund. It's a mortgage pool fund. We have currently $25 million of assets under management in the Pacific Private Money Fund, and the only thing we do with those funds is make real estate secured loans. And not only real estate secured loans, but short-term real estate secured loans. The average maturity in the portfolio is 1 year. We do have a couple of 2 and 3 year notes in there. Yes, we've got some 6-month loans, but the average maturity is 12 months. So it's a revolving fund. It's made available to mostly Northern California are the loans in the portfolio. Northern California residents who are looking for fast, reliable funding for a real estate transaction. We're the plan B that people go to when plan A, conventional financing, is not an option for that transaction. What kind of situations might that look like? Well, let's say you're in contract and you were pre-approved for a mortgage and everything looks good. You're well into the contract. You're beyond the deposit date. Your deposit's gone hard, as they call it, meaning it's non-refundable, and you think everything's going good, and then you find out from your mortgage broker that there's a glitch in the process and it looks like it's going to take a little longer. Well, that's okay if the seller gives you an extension, but oftentimes in this very tight market with sellers anxious to unload their properties, you can't always get endless extensions. And we have a lot of people come to us and say they've already had 1 or 2 extensions. The seller's no longer willing to grant another extension. If they don't close by next Friday, they're going to lose their deposit. The buyer, that is going to lose their deposit. The seller's going to sell to the guy that's in backup position. And so we rescue a lot of deals. And not only do we rescue deals, we give opportunities for people who maybe are tired of competing with cash buyers and they want to be able to close quickly, make a non-contingent offer on a property. We can guarantee them that we will be able to close for them in a short period of time, sometimes as short as 5 to 7 business days. So that's another way people use our short-term loans.
Well, another thing is we were talking about this deal of the week where someone wants to move, but they can't afford both houses. Go into that.
Yeah, absolutely. So we've got, and this is a very typical situation. This is called a true bridge loan, and the definition of what we refer to as a true bridge loan is when we make you a loan that's collateralized by the house you want to buy, in addition to the house you own today. So a couple came to us. They are in contract to buy a home in the Montclair neighborhood of Oakland, and the purchase price is $1.6 million. They own a home in Sunnyvale with $900,000 in equity. They've got a $300,000 first that's worth $1.2 million. They believe that's going to be the sale price. That's a lot of equity. Now, they could sell that home first and try to time everything so that they could move into the Oakland house, but the seller isn't willing to give them that contingency. They have to close in a reasonable period of time. In this case, it's actually fairly quick. So we agreed to, because they had $900,000 in equity in their Sunnyvale home, we said, we can make you a loan for 100% of the purchase price of the Montclair home. We can loan you $1.6 million, and we'll get a first position loan on that, which will be 100% of the loan. However, from a lender's point of view, we're not worried about 100% financing because we're going to also record our deed of trust on their Sunnyvale home in second position and use that $900,000 additional equity as protection. So So we do the math at our office, and this is something no bank will do. I mean, unless you have this great relationship with your local regional bank, they're not going to do a deal like this for you.
Well,
but
also,
we do it all the time.
Okay, so the process is when they eventually sell the house for $1.2 million
In Sunnyvale, right?
In Sunnyvale,
They're going to pay our house down.
Yeah, not your loan gets paid down $900,000, so you'll be basically a first mortgage of $700,000 on the new house. And at that point, they can just refinance.
Right. At that point, they'll conventionally refinance. So what do we do in advance of a situation like that? Well, we look at the borrower. Usually, they're coming to us from a mortgage broker who says these guys are golden. They're going to, I can get them a 70 or 80% refinance if you can just make this transaction happen for us. And it's a two-stage payoff, as Edward said. We get them 100% financing on a target property. We cross it with their existing home. When they sell their existing home, there's a pay down of principal on the loan. Now they've got a loan amount on their new home that is manageable and easily refinanceable. They can go out and get a great, stellar, low 4% rate 30-year mortgage, and we get paid off. And there's no prepayment penalty on any loans that we make at Pacific Private Money. So really all your cost is the higher interest rate that you're paying, which could be anywhere from 8.9 to 9.9%. Yes, it's high, but hey, it's fast, reliable financing, and that's kind of the market for this type of funding product. And anywhere from 1 to 3 points, depending on the size of the loan and the complexity of the deal. So for more information, go to our website, pacificprivatemoney.com. That's pacificprivatemoney.com. Give us a call anytime. We love taking calls during the day, during the workday for a scenario. You don't have to send a complete application in for us to be able to tell you what we can do. We listen to loan situations, loan scenarios as we call it, every single day, and we can tell you over the phone in 5 minutes if we can do the deal and what the price is going to be. It's just, it couldn't be easier. We're fast, friendly, and reliable. Those are the three things you'll see. We promote that on our website, and those are our values, among other great values that we have in our company. But check us out at pacificprivatemoney.com.
Yeah, in fact, in this one example, Sunnyvale Montclair deal, the borrower actually had pretty good credit. I think they were like the mid 740, 750 range.
It's so amazing that so many of our borrowers at Pacific Private Money have high FICO scores, and many of them have 800 and above scores. So the old reputation that hard money or private money still has in a lot of the market is just, it's not true anymore. I still meet people today, and I explain my business to them, and they say, oh yeah, you guys make seconds. Well, no, not really, or seconds to people in financial distress, right? Well, that's what hard money was and private money lending was 20 years ago, but it really is a different industry now because there's no subprime industry since the last 10 years there hasn't been a subprime industry, and because banks make it so much more difficult, take longer to do a deal. Companies like Pacific Private Money have sprung up in the last 8 years to kind of fill that gap and provide that service to people that banks can't provide. So again, check us out, pacificprivatemoney.com.
All right, we're going to cut to our last commercial break, and again, we want to make a quick mention for the high-tech screens and shades. I've used them at my house. They do a phenomenal job. Check them out at hightechscreensandshades.com. Call my friend Rick at 415-328-4613 for shades and awnings and retractable screens, especially with the summertime coming and all those bugs. Don't touch that dial. The best in investing. I'll have some closing comments when we get back. All right. Okay. 5-minute segment. I'll be out tomorrow. I mean, I'll have my cell phone, but I'll be visiting the children. This Christian turns 25 years old.
Wow, that's awesome. How fun.
Yeah.
It's a quarter century.
You're going to meet his girlfriend for the first time.
Oh, really?
New one.
Bring it back.
Awesome. What's that?
Bring your bat. Oh, wait, that's the other way around. It's when your daughter introduces you to her boyfriend.
That's right. That's when
when your son introduces you to his girlfriend.
That's when I
keep him honest.
Yeah, that's it. I'm gonna go with a baseball bat and right, we meet him at the door when daughter introduces. So yeah, if you're thinking they do that hugging or kissing, just know I got no problem going back to prison, right? All right, just a few minutes. What do you want to cover?
Let's see. I'll just do a wrap up of what we do.
Okay. It's pretty cool that they're rebroadcasting this at 7 a.m. on Sunday and then on 8:60. Here we go. Welcome back to the Best of Investing. Last time for today, I'm Edward Brown, your host, along with Mark Hunt of Pacific Private Money. Mark, tell us again what you do.
So, to wrap up this last 5 minutes of the show, so we start the show with an interview from Greg at One Rent talking about what's new in property management today, and then the rest of the show we've been talking about, well, a couple of different things. We've been talking about the two types of clients we serve at Pacific Private Money. We provide short-term, also known as bridge loans, to consumers and real estate investors who are in need of fast, reliable financing. And we fund that money with private capital through one of our three funds, including our number one fund at Pacific Private Money, which is called the Pacific Private Money Fund. Fancy that. And we provide high yields to those investors. So on both sides of the table there, fast, reliable financing for our borrower clients and for our investor clients, high, reliable yields with safety and security features that you're not going to find in traditional investments. Now, investing in a mortgage pool fund is considered an alternative investment. So if you have IRA monies and you'd like to invest some of those IRA monies in a higher yielding investment option to kind of boost the yield in your overall portfolio, you're going to need to have that money in a self-directed IRA. And many brokerages do not allow the type of self-direction so that you can invest in a mortgage pool fund. In that situation, you would want to roll over a portion of your IRA monies with a company known as an IRA custodian that specializes in self-direction. And one of the most popular companies in the Bay Area who allow self-direction for a number of different IRA-type accounts is IRA Services, located right here in the Bay Area in San Carlos. That's iraservices.com. But you don't need to invest in your IRA, of course. We're only allowed to take 25% IRA money out of the 100% of our assets under management. So you can invest your corporate money, you can invest your individual savings, maybe you've got a living trust. We have families that have multiple accounts with us. We have one family that has 5 different accounts. They've got husband and wife each have their own IRA, and they also have a living trust, and they've also set up other accounts for other monies that they've designated for other family members who didn't quite qualify from the income point of view to invest with Pacific Private Money. To invest, you do need to be an accredited investor. You have to qualify under the definition of what is an accredited investor, and that would be someone with a net worth of at least $1 million or more, exclusive of the equity in your home. So they don't allow you to count the equity in your home in order to qualify for that $1 million net worth threshold. Or you can qualify as an accredited investor if your income as a single person is $200,000 or more, and if you're married, $300,000 or more. So that's the clientele we serve at Pacific Private Money. We've been growing year over year between 15 and 20%, and I'm really excited because we've been talking to some companies who've been approaching us to do some significant capital raises for us so that we can actually expand the type of borrower services that we have. So if that happens, you'll hear about that in a future announcement. Meanwhile, we're heading into spring. The sun's out. After a very kind of slow February in the real estate marketplace, both on the mortgage brokerage side and the realtors I've talked about, they were all crying the blues in February as it rained virtually every day of the month, it seemed. But now that the sun's been out, the open houses are packed. Activity among mortgage brokers for all those purchases are going good. So it's a great time to be investing in real estate.
Yeah, and I just wanted to note here, I just got an email from one of your competitors, because I always check this stuff out, right?
Yeah.
And these guys are paying almost exactly the same interest rate that you are on your fund, except theirs is about 25% leverage, and you have an unleveraged fund.
Unleveraged
so you're
fund,
more
yeah.
conservative. Check out PacificPrivateMoney.com. All right, we're going to cut out here. Here's our thoughts for the day. If 7-Eleven's open 24 hours a day, 365 days a year, why are there locks on the doors? Okay? And if you can't drink and drive, why do you need a driver's license to buy liquor? And why do bars have parking lots? I don't understand. Okay. Tune in next week to The Best of Investing. We're going to be giving away more free prizes for answering trivia questions. Thanks for listening. On behalf of our team, I'm Edward Brown, wishing you the best of investing. So long.
Good. Did you do the sports show today?
I did, yeah. We had Rich Walkoff.
Yeah.